For example, if you have transactions in Japanese yen outside of Japan, those are called euro yen transactions. I guess if you do euro based euro transactions in US, euro denominated transaction in US, those would be euros. It's just terminology. But that's where most of the especially short-term currency markets are located because of the ease of regulations, especially between banks. And these things are done at high levels. So if you want to do a $10,000 transaction, you can't do it in the euro market because they're not even going to bother picking up your call. Anything in euro currency markets are multiples of $1 million or more. In fact, the traders that operate in these markets, they have a terminology. And somebody says, "Oh, I borrowed $500 yesterday." That means I borrowed $500 million. So our company made $5 this year. That means $5 million. Some of it is arrogance. Some of it is, you know, time is important. Saying 5 million, especially when you're doing uh, type transactions, saves time. For example, a standard quote asking is USD JPY 50. That means give me a quote on US dollar Japanese yen exchange rate for $50 million instead of writing 50 million. Because things move fast, you got to do things fast. Now, for these markets, I mean, the current edition of the book is before the demise of the LIBOR. Let's do that discussion and wrap it up. There was a reference rate for these kinds of transactions. It was called London Interbank Offered Rate. Uh, there was a consortium of banks in LIBOR consortium. These were typically large banks that operated in London, also known as the City. What we call Wall Street here is called City in London financial markets. Every noon London time, these banks announce the rate at which they would be willing to lend money to any bank in the LIBOR consortium. So I'm Barings Bank, which doesn't exist anymore, but it's not, let's say I'm ING Barings Bank, and I say I'm willing to lend to anybody in the consortium at 5:30. JP Morgan maybe says I'm going to lend at 5:25. You take those offered numbers from all of these banks, you average them out, that becomes the published LIBOR rate. That's typically used as a reference. For example, let's say I'm a client of JP Morgan, and obviously I'm a little bit less credit worthy than JP Morgan, and I'm going to go borrow $50 million from them. And most transactions in euro currency markets, if not all, are in so-called floating rate terms. They say, okay, I lend it to you. How about LIBOR plus one? That means whatever the LIBOR rate that day is, plus 1 percentage point. And if I'm going to make quarterly payments, 3 months from now, I'm going to get the new LIBOR rate, add 1% to that, so on and so forth. This market was so big, all sorts of derivative transactions on money market was also LIBOR based. For example, there was a futures contract called Euro Dollar Futures, which was effectively a futures contract on the LIBOR rate. Let's say I'm gonna, I know I'm gonna want to borrow, or I know I'm gonna have to make, uh, I know I'm gonna have to borrow $50 million 6 months from now. One option is wait 6 months and borrow at whatever rate that is now. Okay. And if the interest rates go up, cost of that to me is going to be high, right? The alternative is you hedge yourself in the euro dollar futures. You basically you want to make money if the interest rates go up, which means you're going to short the euro dollar futures. So if LIBOR goes from 5 to 6, yes, I'm going to make 1% more payment, but I'm going to be compensated from my futures contract, just like the exchange rate stuff. We're going to go over those later on, but and those euro dollar futures contracts, man, they were so deep. You can do options on those. You can do swaps based on those. In fact, uh, euro currency markets based on LIBOR and stuff, they had annual transaction volume over 450 trillion. That means daily, in terms of business day, is close to $2 trillion a day. That's huge money. I mean, the GDP of US is about 30, I think. So every 3 weeks, the transaction volume in that market was equal to US GDP, annual GDP. But just like when you leave people to their own devices, corruption comes in. There are a lot of transactions, especially bets on where LIBOR is going to be. Uh, People speculate on these things. So if LIBOR is 5 basis points above, you may lose money. 5 basis points below, you may make money. You can do transactions like those, the so-called collars. And certain banks started doing deals where, for to benefit their own book, that day they need LIBOR to be high. Okay? So they go to, let's say I'm JP Morgan, and I go to HSBC and say, please, for today, can you put in a high number so that LIBOR will be high? Well, when you need it, I'm going to reciprocate. So you scratch my back, I scratch your back. And this sort of stuff started happening quite a bit. There was a big investigation. A lot of banks were fined, and LIBOR is no more. Now we have some other stuff, which we're going to cover later. And the biggest problem is those euro dollar futures were so simple to operate. Now we have complicated stuff. And yet you have different stuff in different countries. In US, we have now a reference rate called SOFR, Secured Overnight Financing Rate. And it depends upon the daily compounded average 3 month rates. I mean, you actually need a complicated Excel sheet to be able to figure out what you're doing. With Eurodollar futures, you could do stuff in your head. Now you can't anymore. That doesn't mean you can't do your setup, get the data published by US Treasury, and work with it, but you can't leave it to junior traders anymore. And Europe does different stuff. Japan does different stuff. Let's stop here. On Wednesday, we're gonna finish the rest of this chapter, especially the credit side, and a little bit about the futures contracts as well. Okay. I'll see you guys Wednesday. And I'll post your homework assignments tomorrow afternoon, effectively on chapter 5 and 7, spot and futures, and that sort of stuff.